Thank you very much for joining us today. This is the continuation of our investment webinars and the first one for the year 2024. As you can see, our logo is Rupee to Sampatti. Essentially, as you know, the exchange rate between Rupee and the US dollar, it is about 85 times. And we are hoping that the knowledge and the insight you get from our interactions will also be sufficiently ambitious to make sure that you are also going from a small amount of money to creating wealth, and therefore, making sure that all of us are safe at a time when we have to ultimately retire. This is really important from the longevity point of view. Life expectancy is increasing. It's not surprising that many people live up to the age of 70 and 80 years. And if you take the retirement age as 65, it's a significant amount of time that we want to live and enjoy. And therefore, sufficient amount of wealth is important. Recently, we had a conference of postgraduate students. And in the session, which was like an open mic, most of them had queries and doubts about how to manage their finances. And therefore, Rupee to Sampatti has different programs at different levels of expertise. And I'm sure that you will find many of them of benefit. For the past recordings, they are available on the YouTube channel of Avinash Creations. And if you have any queries regarding a topic that was decided earlier, you can refer to them. Today, it is my honor and privilege to be talking to you about the topic of relative strength analysis. And these include practical tools to spot early outperformance. If the market is already going up and the value of a stock is already high, then an investment at that time might be a little less rewarding. However, is there a way that we can identify early those who are going to outperform as compared to the market? And this is by doing relative strength analysis. For today's session, our speaker is none other than Dr. Avinash Talele. I'm proud to say that he is a very dear friend. Of course, we are both doctors. And he actually is an entrepreneur as well. So he has set up his own hospital. And you will be happy to note that as an independent person having a hospital, he has been able to get NABH accreditation as well. And this is extremely commendable for somebody who's outside a corporate chain of hospitals. So Dr. Avinash Talele is MD and DM in medical oncology and a hematologist. He is in charge of the Restora Oncocare Center in Dombivli, and he is also attached to Kokila and Dhirubhai Ambani Hospital in Navi Mumbai. But why is he an expert in today's Rupee to Sampatti? That is because he has tremendous insight into how to manage finances in a systematic manner. And why does he have this capability? It is because he is a chartered market technician at CMP level 2, as well as a certified financial analysis, CFA level 2. And I think this is something that is not very easy to do. He has really dedicated time out of his medical practice to gain proficiency and systematic knowledge. And he is going to tell us today about how to do relative strength analysis and what are the practical tools that will allow us to identify those who will be unicorns in the future. After his talk, we will also have two experts who are also going to give their comments. One of them is Dr. Chetna Bakshi. She is practicing in Thane, and her real strength is in trading, especially in swing trading. Chetna is very successful in the way that she manages that, and I'm sure that all of us will benefit immensely for her expertise and comments as well. The second expert is none other than Dr. Niraj Chawda. He runs a multi-speciality hospital that he owns in Vadodara. And he has, really worked painstakingly on his own to understand how to invest in mutual funds. This he has been doing for a long time, since 2004. And in fact, his way of learning and understanding and analysis is not what is taught in the normal course that are professionally available. He has devised his own system, and the way that he has interpreted that analysis helps a lot in doing a systematic investment different from what is taught elsewhere. So these are the two experts, Dr. Niraj Chawda and Dr. Chetna Bakshi. But before that, we will have a talk from our expert, Dr. Avinash Talele. So Avinash, over to you. Thank you.
Good evening, everyone. Yes, am I audible?
Yes, sir.
Yeah. Thank you. Thank you so much, Purvish Parekh, sir. It's indeed an honor and privilege to be here amongst the most learned and elite people of the country. And Purvish Parekh, sir, has been the teacher mentor, and he's very humble to call me as a friend. But I've been a student since many years. A brief about me. Today, I over a period of 5, 6 years, I wanted to devise a system where I could just look at it at the end of a week, or maybe at the end of the month, or maybe even at the end of a quarter, and not be worried to catch every news, every update, every application, every notification that is coming in. I used to do that in my initial days, and I was overwhelmed with all of that. So then from there need started to devise a system where I can focus on my main work, and at the same time I can handle some of the equity and the assets effectively. So with that, I landed up with one of the technical analysis tool, that is relative strength analysis, and I had I am with that since almost 5 to 6 years, and I take the permission of everybody, and I'll start the talk today. So, relative strength analysis, a tool to spot early outperformers. I have a few disclaimers. I am a
So
student
your
of.
screen is not visible, sir.
Oh,
If you're
oh, oh, I'm
sharing a
so
screen.
sorry. I'm so sorry. Yes, screen is not visible. Share. Okay, just a minute. Is it visible now?
Yes, sir.
Yeah, sorry.
Sir, if
So,
we can just put it into presentation also.
yeah, is this okay now? Yeah.
Perfect, sir.
So after hopping on multiple systems and wasting my time for catching all the news that is there in all the news channels and updates and various applications, I was overwhelmed, and I found out a way during my training and during some of the mentors I came across. I came across this phenomenal concept of relative strength analysis, and I want to share that with you here today. So, a tool to spot early outperformers. A few disclaimers. I do not claim to be an expert. I am still a student of market and learning and exploring it ongoingly. By profession, I am still a medical oncologist, and I'm proud of that. Market is supreme, and none of the scripts we discuss here should be taken as a recommendation or advice to buy or sell now or later. This is purely my interpretation of relative strength analysis. Any flaws, error, or omissions in explaining the systems are completely mine, and I am responsible for my communication. So the intention of today's talk is, this is one is the intention, another is promise, that I want to promise you all at the end of the talk, that you will be able to find out performance and handle them and to generate positive returns. Make your money work for you, reduce your drawdown and underwater equity curve. I mean, underwater equity curve, what I mean is you have entered into a script, but it is not performing. So there you are losing your time. You'll be able to calculate your portfolio returns and ensure portfolio returns outperform the benchmark, even when the markets are flat. Yes. Outperforming benchmark by benchmark here, I am implying Nifty 50. The reason we are doing active investment is we want to beat the benchmark. If we are not able to beat the benchmark, there is no meaning in doing active interventions in the market. You can simply invest in the index fund, and that should be it. You will also avoid your money getting stuck into stock and wasting time. And you will know that you should not be in this stock, waste your time further, because hoping that the stock you have picked and bought it, just you have bought it, and it will rise or it will perform is not a proper strategy. Hope is never a strategy. When you are in profits, the biggest challenge I have faced as a beginner, and I see many of my colleagues deal with, is they cannot handle the profit wells. The moment they have some 30-50% profits, they are not able to handle it and make it large. So I wanted to always have a system where I could know, okay, I am in profit and probably this is going to continue further. So this is one of the ways that we can ensure that we are on the right track and we should continue this further. And calculate your portfolio returns and ensure that it compounds when the market makes new highs. Most of the time, what happens, market is making new high, but our portfolio is always in red. So how do we ensure that our portfolio also makes a new high when our markets are rising? That is the biggest challenge that many of us face, and I'll try to resolve this mystery around this topic today. So a few word about my mentor who introduced me to the RS system is Mr. Premal Parekh from Ahmedabad. He introduced me to this awesome system of relative strength analysis, and Tom Dorsey. Tom Dorsey is one of the very recognized people in the world for point and figure charts and relative strength analysis. And as Enrique Iglesias says, you can run, you can hide, but you can't escape, my love. I mean, the biases. We all are surrounded by the various cognitive biases. We have to be grounded in them and still take the rational decisions. So these biases will already always be there with us. And in the face of these, we have to take rational decisions. Proper analysis of data, discipline, and following a robust system are our only ways that we can deal with the bias and perform in the markets. Some things are non-negotiable. I want to bring to everybody's attention here is, for every trade or every transaction that we do, the exit is very critical. Everybody focuses on interest, kya buy karna hai, kab buy karna hai, but I'm more focused on the exit. And there are only 4 possible outcomes of every possible trade or uh, transaction that we do in the equity markets. Either we will have a big win or small win, small loss or a big loss. The only thing that if we avoid big losses, we are in the game. Big win, no problem. Small win, no problem. Small loss, no problem. But only we have to avoid big losses, because that will eat into our capital and it will be very much difficult for us to break even from there. So this happens because of snowballing effect. The white snowball hits your walls and stick to it and build up a wall. This gives us a momentum and progression. Unfortunately, not all the snowballs are white. There will be some losses. These are the gray snowballs. They dissolve the snow and destroy the wall and slowly grind down your wall and actually can cripple you and you can erode your capital. These black snowballs need to be small in order to make a big wall. Yes, and from the master himself, Mark Douglas, there are always 5 fundamental truths, no matter what system, what accuracy, what you are following. You should always keep this in mind. I have kept this as a sticker in my room. Anything can happen. You need to know, you don't need to know what is going to happen next in order to make money. There is random distribution between wins and losses for every given set of variables that defines an edge. This is true not just for retailers, even for the institutes. The edge is nothing more than an indicator of higher probability of one over the other, and every moment in the market is unique. Coming to the topic, relative strength is a technique which is used in momentum investing to identify stocks or securities. It consists of identifying and investing in those securities that have performed well relative to the market benchmark. Here we will take the market benchmark as Nifty 50. If it is a large cap. For mid cap and small cap, we can take Nifty 500 also. So as said, relative strength is a type of momentum investing used by technical analysis and value investors. The difference between them is the time frame in which they follow the system. It helps to predict that the trends currently displayed by the market, and if they continue long enough, they can realize a positive return. I have few assumptions and analogy. So as market is driven by bulls and bears. So bulls and bears are all forces. Like bulls will give the force to take the market up, bears will pull it down. So most of the times we will see that most of the laws of physics are applicable to the stock market. Be it a random walk hypothesis, and we have a random Brownian movement of particles suspended in matter. Similarly, Newton's law of motion. I just want to draw your attention to the first Newton's law of motion. A body at rest will continue to remain at rest, and body in motion will continue to remain in motion unless acted upon on external forces. So how does this apply to us? A stock that is lying idle and sitting around will continue to sit around like that. Just because we buying it and hoping that once because I have bought it, it should move. That is not going to happen. We don't have the capital nor we have the bandwidth to make the scripts move. Similarly, if we identify outperformers and early movers, it will continue to remain like that. And as long as it is in sync with our hypothesis and our analysis, we will continue to be there. Because second law states that force is equal to mass into acceleration. If it catches momentum, it will continue to move the same way unless been acted upon by the law 3. So the first two laws is that what I want to impress here upon and draw an analogy from this to a relay race. Here in relay race, what we see is there are 4 people. Once one person completes the round, he hands it over the baton to the another person, and another person takes the charge and completes the next part of the race. So it is just like saying, I have run my part, now it is your turn. I just want to remember this, ask you to remember this when we come back to this later. This is exactly what happens in the market. Every new leg after the correction has been and will be driven by a new emerging market leader, which was not leader in the past. That is how the market makes the new leg of a rally, and that is how new highs are made. And so new people participate, new businesses, they participate to make the new highs. So which is very much similar to this movie in the Rocky 3. Now it's your turn. So what exactly is relative strength? So relative strength should not be confused with something very familiar known as relative strength index. That is a momentum oscillator given by Willis Wider. It is one of the technical indicators. It has its implications, but because they sound same, I just want to clear that it is different than that. So what is exactly relative strength? It is a ratio. It is a ratio means it is a numerator divided by denominator. It is a ratio of stock or a security to its benchmark index, Nifty 50, Nifty 500. So for example, to give you, so like HDFC Bank divided by Bank Nifty will give you the relative strength of HDFC Bank. SBI Bank divided by Bank Nifty will give us the relative strength of SBI Bank. A pharma stock, says Zydus Life Sciences divided by Nifty Pharma will give us relative strength of Zydus Pharma. That way around. So amongst various sectors too, we can identify any one sector that is performing well. First, we need to identify the sector, and from that sector, because the sector is made up of multiple stocks. So it is some of the stocks who are pulling the index or the sector up. So we have to identify them. How is it calculated or how it is principle is relative strength is considered positive if stock is up more than the underlying benchmark, which means if the stock is more by 100 points and the Nifty, stock is more by 5% and the Nifty is more than 1%, say in 1 month. So the stock is outperforming Nifty by 4%. That means it is RS positive stock. Now, similarly, RS positive can be stock is up, but the underlying benchmark is flat. That again is RS positive, which means relative strength is positive. So the point here I want to emphasize is even if the Nifty is flat or the benchmark is flat, still we can find some relative strength stocks and which will again outperform the Nifty. Again, RS is positive when stock is flat, but the benchmark is going negative and stock is falling, but it is falling less than the benchmark. This is very much important when we face severe corrections. One of the recent examples I can give you is this 2002 COVID crisis, where we had the lower circuit. Approximately it was on 14th or 15th of March 2022. So from that day onwards, Nifty corrected around at least 40 odd percent. And all those stocks, to name few of them, Avenue Supermart, and Bajaj Finance, they fell, but they fell less than the Nifty. So they were first to rise above the Nifty also. And naturally, they outperformed the gains from the benchmark there. So every correction, there will be, that is an opportunity for us to find which stocks are falling less, which are recovering faster. And if we track them properly, we can identify the first early emerging leaders here. RS is negative when the stock is falling and underperforming more than the benchmark. This is relative strength negative. This we want to categorically avoid. So the advantage is we can identify emerging leader even when the broader market is flat, just as I said. It can be one of the parameters in various data points to narrow down to the scripts, and then you can apply your refined technical analysis once you have shortlisted certain stocks. It can help us to select the best asset class to be invested in real time. Also, I don't know any other way to find out whether to continue holding the profits, to add further, how to guide an exit from a sector or stock with reasonable profits. As we have a finite capital, it can guide us to allocate our money in the best possible funds and find new horses. So to tell you how this relative strength works, let me just draw your attention to the historical data of Nifty and the outperformance that we had since 2003 to 2020. The reason I'm declaring it till 2020 is what happened after 2020. I can show you some mature data about it. So as we can see, this is a line chart depicting around almost uh, 2 decades of data. Here we can see from can you see my cursor here? So from 2003 to 2008, Nifty, it rose, it gave around 6% returns. And there was a correction in 2008. It tanked down by 65%. This is the famous subprime crisis that we all know, Lehman Brothers crisis. So once it tanked down, again it grew and drew up by 181% by 2010. From here again, I want to draw your attention here for this rectangle box where it was relatively sideways. Even if the broader market was sideways, there were certain outperformers in this time, and I will show you them in subsequent slides. From here again, Nifty made a gains of 101%. Again, there was a correction of 13 odd, 17 odd percent, and again rise. This all we know, right? But what I want to show you here is after every correction, the every emerging market leader is not the same which was there previously. There are always new sectors coming into picture and we need to identify them. Again, here there's a, as I said, 40% dip in the COVID time, and again 185% rise within 1 year. Yeah. So this is the trend and the leaders. We can see from 2003 to 2008, it was bull, but the market leaders were Nifty 500, Bank, IT, and Reliance group of stocks. 2008 was a bear. We all know that. From 8 to 10, again, it was Bank, IT, and mid caps. Here again, 11, we can see Pharma, FMCG. 11 to 15, Pharma, Auto, Media, FMCG. 15, 16 is consumption. 20 is again Pharma. 2021 metal, small mid caps, IT and pharma. So these are in the sequence of the highest leaders first. So as you can see, every bull has a different leader, which may or may not be the part of the previous rally. So because there is always summer somewhere, bull. So a bull market is like a sunshine. There is always sunshine happening somewhere. So even when the broader markets are flat, we need to look at those stocks or scripts which are giving returns. So the major takeaway from these two slides is there are always outperformers out there, no matter what the trend of the market is. Market leaders will change at every phase. Every new leg of impulse or rally is fueled by a different sector. Remember, I just showed you that relay, and if they are handing over the baton to the other partners of theirs. There will always be outliers, outperformers. We need to identify them for better opportunities. There will always be underperformers that will fall more than index. We need to avoid them. This is the probably one of the main reasons why market recover, but our portfolio doesn't, because we keep to continue to hold the good stocks or good companies who have performed well in the previous rallies. The very good example recently I can give you to is banks. The best of the banks and the best of the businesses. Nothing wrong with the business, nothing wrong with them. But you see, when the Nifty took out its previous high recently, none of the banks have performed in the last 1 year. I mean, excepting PSU banks, SBI and PSU banks. All the major drivers have been going flat. And the sector that is performing well now is the railway sectors, metals, and other policy trigger sectors like ethanol policies and power sectors. So investor buy the stocks of previous rally and keep holding them. But times change, and so should the allocation in the stocks and sectors. Better businesses, new conditions, policy triggers make things favorable that lead markets to the next rally. So our intention should be to have those stocks which are actually contributing in the next big rally of the market. If we are able to do that, then our portfolio also will make a new high when the market makes a new high. So the uptrend is due to the new market leader and individual portfolios underperform. This is a problem with most of us. Why does outperformance and underperform exactly mean? As I've shown you, market trend is up, stock is more than the benchmark. The same has been depicted in the tables here. So there are certain misconceptions of relative strength analysis that it can only help to look at the outperformance in the hindsight. No, I will show you today in real example that how can we do that in the real time. Now, one of the question is when to buy and at what time frame. So here we, as I said, we are having an assumption that one stock which is already performing and running, we will continue to perform in subsequent sessions because we have seen as the first law of Newton. So what I do, I will tell you, I look at the yearly time frame. If the stock has outperformed the benchmark index or the Nifty last year, it will continue to do in the next year too. And this is not just I am saying this because it is my insight or my feeling or that. This is I am saying after studying and validating the data for the last 20 years, which I will share that with you. There is a reason why any stock hits 52-week high. The reason is there is some demand in the stocks. We may not know the exact news. We may not know the exact trigger. We need to know all the information all the time. So a stock that is making 52-week high or a 6 months outperformance, that is 123 days. In one calendar year, there are 245 trading days. So if you divide 245 by 2, it comes out to be 123 days. So a stock that is continuously outperforming the benchmark for more than 6 months is a stock we are interested in. And or if that is hitting the 52-week high. We don't want to be the first to catch the stock. We don't want to be sitting on the monitor overnight catching all the news. We don't want to be the first one to enter. I'll tell you why. Because even if we enter be the first one to enter, you and I cannot move the stocks. So rather than selecting the stock and hoping that it will move, let us have a stock which is already moving. We have big hands and the footprints of big institutions who have already entered the stock, and let us go with them. Let them take the scripts up and we will have our profits following them. We will be on the right side of the market. So let us check the hypothesis. What I am saying, the Newton's law and all of that, whether that is really actually happening. So in 2019, Nifty gave around 12% of gains, and 2020, Nifty gave 15% of gain. So fine, Nifty was trending for these 2 years. And it's a reasonably good gain, 12%, 15%. It is a very good gain. Now in 2019, Adani Green was a stock. It was best performing stock from Nifty 500. It gave 297% returns. Okay. Even if we catch it at 52-week high, or say at the end of one year, see in 2020 what happened. Adani Green gave 532% returns. So just because that has risen by 200% or 100% doesn't mean that the journey is over. It still can go up. And historically that has been happening with us. I will show you multiple examples and some real trades, what I have done. Another example is Tanla platforms, sorry. It grew by 133% in 2019. And now that went to do 2020, it became 855% gains. That one single stock in one calendar, it gave us those many returns. So if we identify relative outperformance, even at the end of 3 months or 6 months, it is absolutely okay to let that first 50% or 100% go. And when we are looking at the gains of 400, 500%, it is fine for us to let go the first 50% because we need to be sure that we are entering into the performing stocks, outperforming stocks. Similarly, like there is no thing that works every time. There is no holy grail. Awas Financiers, it performed by 131%, but in 2019, but it fell down. It did not perform in 2020. So it was minus 14 returns in 2020. Because there are no accidents, as Master Uguay says. And in this famous movie, and in this one of the Pogo cartoons, the enemy is us. It is our emotions. We always fell for discounts. And the news is planted in such a way that, oh, this stock was 300 rupees. Now it is at 150 rupees. It is coming at discount. Take this. There will be some positive news. Somebody will talk positive on TV. This, that, fancy number. And then that is the bias that we have. So enemy is us. We are fond of discounts. What I'm trying to tell you here is to buy at 52-week high, which is exactly opposite of what we think. And that is why I will tell you certain numbers and figures and try and bring you the rationale that why you should buy at 52-week high, or at least you should shortlist those stocks and read them further in your watch list. This is the Adani Green that I told you. Look at this from January 2019 to 2020. It performed for 271%. Even consistent with our hypothesis, if you enter here after 271%, still see there is odd 700% returns there in 1 year. We can have easily taken that if we follow relative strength. Further, it went up. Now, one more thing I want to tell you is anything that goes up will come down. So, one is we are identifying the outperformers. Another very critical thing is exit rules. We need to have our own exit rules. I have my own. I will share some of them with you. Because if you don't exit, historically what we have seen over the past years, most of the scripts that have generated wealth have given back the wealth to the market. And we all know the examples of it. So Adani Green is there in front of us. So coming to the data, while Nifty gained 12% in 2019, around 237 stock outperformed the Nifty index. I'm talking about the equity segment. Out of this 237 stock that outperformed in 2019, 119, that is more than 50% of this cohort, they continued to outperform in 2020. Now, this is interesting. So, if we find an outperforming stocks in 1 year, half of that, they continue that in the second year. So, the momentum continues, as we've seen with the first law, Newton's first law. And can we use this technique to build a portfolio? Now, let us look into this deeper. So, what I did is I analyzed year-wise data showing outperformance of stocks from 2005 to 2020. So I want your attention here because this will build your conviction what I'm trying to tell you. So from 2005, Nifty gave 36% returns. And the stock that outperformed Nifty were 304. Out of this 304, 54 performed next year. So the percentage of next year outperformance is 17%. Next year again, Nifty was trending in 2005, 6, 39%. Number of stocks outperformed Nifty was 145. Out of this 145, 54 as we see here, they continued their momentum this year also. So who joined the new? The 36% of them, they were newcomers who had shown momentum. Similarly, carrying this, so every time there are the stocks which are outperforming and there are new entrants joining. So every time the new entrants they are joining are in the range of 36, 13, 20. And in 2008, even when the Nifty was, index was 50% lower, there were 175 stocks that had outperformed the Nifty. And 39 odd stocks, they were new. So even when so-called bear market, there are some people who made money there, even by going long. And out of this, 49% performed next year too. Similarly, so the point I want to make here is there are always some new year outperformance and there are always outperformance from the previous year who continue to perform. So conclusions and inferences, number of outperforming stock are more in the bullish trend and less in the bearish years. Now, when the market is bulling and number of outperforming stock is less, which means that the heavyweights, that is the stocks which are making Nifty 50, they are lifting up the index and they are giving better returns. That has happened in 2006. So the large cap, they contributed to the rally. Sometimes what happens, the market is sideways and still many stocks, they outperform the previous year. So here, the non-Nifty components are performing, mid caps and small caps are doing well. We should be in those scripts. 2008, 13, 14 and 19, most of the stocks outperformed. This is the time where every newcomer who came to the market, they were invariably right and they made money. Most of them, they outperformed and continue to do so in subsequent times. So here is the bottom line. Averagely, in Indian equity, 34% of the stocks of the current year outperformers continue to do so in the subsequent years. And 35% of the current year managed to outperform subsequent year as well. Now, let us look at top 100 stocks that outperform Nifty every year since 2005. So, similar data we have every year next outperformers from the range of 16 to 32%. And look at the Nifty returns. Every time outperformance stocks were better than Nifty, and we could conclude that 32% of the current year outperformance were previous year outperformance and outperformed the subsequent year also, as I told you in the last slide. So what about the underperformance stocks in the Nifty? So 23% of the underperforming stocks were outperformers in the previous years. As I said, not everything will continue to go up only. We need to have exit rules. So these are the 23% of the stocks who are showing weaknesses in context of the benchmark. So historically, average wise, 23% of the stocks that create wealth, 23% of them go down every year. We need to identify them early. We need to preserve our capital and we need to exit from them. So the key takeaway, concept of outperformance is useful, but it has to be interpreted with the trend of benchmark. This relative strength is just one of the data point for confirmation tools, and other tools are needed to filter and refine the stock later. The market trend and phase will help us choose the best of these, whether to go for mid cap, small caps, large one. And the pattern of outperformance and underperformance are useful in all securities, all asset classes, in all different time zones, whether short, medium, or long term. So to summarize, as we know, some stock or sectors are the flavor of the season and the leaders of the trend and continue outperform during the most of the uptrend. Identifying them and can be extremely rewarding. Since most important is stock selection and the market phase. Once it is done, one can define specific entry points. Relative strength analysis can help us to identify the stock. Once you have the stock, you can choose your entry point, any analysis that you're comfortable with. I will share you my method. So to conclude, now this is my corollary from all of that. So we all want multi-baggers, right? Multi-baggers mean the stock which is given 200%, 500%, 800%. Now, for a stock to deliver 200% in a year, it has to go through a path. It cannot overnight give us 200%. It has to go through a path of 100% returns. And before that, it has to give us a path of 50% returns. And at times, when they reach to 100% returns, it usually has its 52-week high. Usually it has. So one way to identify the stock is to create a watch list of these stocks crossing 50% or 100% returns in the year. Some of them use quarterly outperformance in a sector, particular sector on a Nifty or both. Sometimes there are stocks which have no sectors. There is no defined index. So I'll tell you how to create an index, customized index to find out those stocks also. Once we identify those sectors, we need to handle them well and carry them well until they continue to outperform. Because we have seen every year 23 odd percent will lose the steam and come down, and 30% will continue to perform, and every year 30% new members are getting added. So even if you have lost the opportunity last year, still you can find from performance from them, and every year 30% will join. So we still have chances to find new multi-baggers. It is not the end of the world. That is what I want to emphasize here. Coming to the practical tips and steps, this is one of the application that I use. This is I'm using the premium version, but I'm sharing the data from the free version. This is the stockage. So what I do is I find the top gainers of Nifty 500 for 3 months time frame. First, I find it 3 months time frame. This is yesterday's snapshot when I was making this latest data. So what I found is IRFC has rise by 138%. Hudco has been rise by 126%. Shoba, Hindustan Copper, blah, blah, blah. So now something is happening. Naturally, Nifty has not risen by 138% in 3 months. So Nifty, this is outperforming Nifty. We'll just confirm that. Another thing that I do is I scan for stock that are 53-week high. As I said, stock rising more than 50% in the quarter or last 6 months. I look for some policy triggers. There are certain policy triggers, say like ethanol policy trigger. Then there are certain ways traded to delivery volume percentage. Now, people look at volumes. Volumes, there are various ways to look at volumes. One of the ways is to look at the total volume or historical volume. And one is to compare with the historical volume that I will show you. Another way is to find out of the trading volume, how much the delivery is being taken. I mean, how much they are carrying back to their equity portfolios. This tells us that people are holding them. For example, if me and one of my friend, we keep on trading the same stock 100 times in a day, we can generate volumes. 1,000 stock in each transaction 100 times, 1,000 into 10, that much volume we can generate. But we are not taking the delivery. So if we have one parameter of delivery to traded volumes, we can find out the volume which is there, which is actually traded volume or a delivery based volume, which will help us to build certain conclusions. And once we know, then we can look for other convictions for fundamentals, looking at annual report and chairman messages and etc. So what I follow is I use trading view. I usually follow daily time frame. I usually take my trading decisions on weekly time frame, that is Friday. Friday is the weekly closing candle. Even if I get a trigger on Monday or Tuesday, I wait till Friday to ensure that there is a consistent demand and I buy from 315 to 330 only. I check relative strength by some of the tools. Stockage is one of the applications. What I look at, check at volumes, delivery percentage, ratio traded to delivery percentage, and more delivery percentage. More delivery percentage tells us buying and retaining the stock. So I'll just share my screen here for a moment. So here, so I'll just take and tell you few stocks which I'll tell you how to plot relative strength. I mean, how to look at relative strength. Now, we should look it at a daily time frame. So what I do is I go for this daily time frame. First is what I do this. After doing this, I go to this indicator section and we have our one of the friend Bharat Trader. I do relative strength. First, I'll remove this so that it is clear to everybody. Relative strength. So here there is a relative strength, dual relative strength, Bharat Trader. 2235 people have liked it. These are probably from our RS community, most of them. So what it does is, whenever the stock is performing better than the benchmark, it will be above this zero line. And whenever stock is performing underperforming with the benchmark, it will be in the red line in the daily time frame. But you can see there is something written as RS 123, which means strength for consecutive 123 days where it is outperforming the Nifty index. So to show you how to plot relative strength, I first will go to indicators, relative strength. I'll just show you how to calculate, how the system calculates relative strength. Sorry. This is one of the indicator by Modelius, but he has used SPX. Now our index is Nifty. So we will do Nifty here, Nifty 50, right? And okay. So here we are getting a chart and this is 0. So anything above 0 is good. So RS, you will get the value, you will get the ratio 0.04 and this ratio will improve like this. So as long as it is above and more than 3 months it is above this RS, it is RS positive stock. We are outperforming the benchmark. What we have done, we have just divided the stock by Nifty. So again, we'll take this relative strength, what I told you. Direct trader. Yes. So here we can see this stock is outperforming and you can see certain lines that I have made. As I'll just reduce the time frame for you. Yeah. So this is where first time I got a trigger to buy. I bought it because it made a new 52-week high. I bought it at the first time. This is exactly opposite and contrary to what we are usually doing. I bought it at this price. When I reduce the time frame, I will show you that that had been, you can see this. You can see this green thing before. So it had been consistently outperforming the benchmark for quite some time. At that time, I did not knew whether it will continue to go this high or not. I bought it, I kept it. It made a high, it made a correction. I have my exit rules. I will tell that to you. But you can see here, this RS is positive even in weekly time frame. So which means even if it is correcting, it is still outperforming the benchmark. Now this is the only tool that is telling me I can continue to hold this because it is beating my benchmark. And I bought it again here when it took out the previous high. So every time there is a new demand, I want to be the part of it. Why? Because the candle here, the day that candle closed here on the closing, yes, Monday is this, again, it was a Friday. There is no demand. I mean, there is pure demand. There is no supply anything here. So I always catch for demands here. And I continue to ride it up. And I didn't know how long it will go. I was just holding it on, holding it on, holding it on. Then there was some weakness. And one of the rules that I have is any stock that corrects 30% from its top, I exit 50% of it. And since from here it made, I doubled my allocation. So from here to here, I already had 200%. And the moment it corrects 30% from the top, I sell 50%. The reason I've written here this is I sold this day here because it triggered my system. You can see 30.43 exit. So I sold 50% of my gains in this Usha Martini. Coming to another real example I want to give you is Jyoti. I mean, I'll give you this only Usha Martini, or you can tell me any stock. I'll tell you my real stock is Tata Elxsi, which many people in the group they know that I've been talking about Tata Elxsi for quite some time now. I hope you can see this. This was my first buying price at 989 odd, because this was again a 52-week high that had been taken out. And this date also, you can see this date here is 3/8/2020. This made a high before the Nifty made its high. So this was outperforming Nifty. In the daily time frame, you can be able to see that. I'll just show you this. In the daily time frame, if we go back here, you can see this green. This has been consistently outperforming Nifty. And it has been, the reason it is green here, it has fallen lesser than the Nifty. That was my first conviction point. Second was here. I bought it first at 980 odd rupees, 989 to be precise. It is going ahead. I added it further at 1932. Every time it made a high and there is a sideways movement, every time it break a 52-week high, I used to add it further. And you can check these things with my colleagues or the messages. Every time it made a high, I used to post in my group or my friends where we discuss. So I didn't know whether it will reach 8,000 or 9,000. I didn't know at that time when I bought it for the first time. So my strategy is very simple. I just want first two profits. If I get the first 200% profits, this 100% profit will finance all the further risk. And as I said, one of the exit rule is 30% drop from the top. So here there was 30% correction from the top. Here I exited 50% of my allocation in Tata Elxsi. And I'm just holding the rest 50%. I will only add further when this goes above 10,689. Another parameter that I want to show you is, I'll show you in this real stock is Jyoti Labs. Jyoti Labs. This is not. Yes. And you remember I said that we need to find the strong hands that are entering in the market before us. So another tool that I use is Traders Lion Enhanced Volume. This is a beautiful tool. I'll show you how to make use of it. We just need to remove this table. This is a very unique tool. So the cutoff that I have told you is every time when it makes a 52-week high, we have to ensure that some strong institution or stronger hands are entering there to hold the stock. And what this tells us here, you can see here on this date, 22/2020, there is 1200% historical volume. Oh, so somebody has bought it in large quantities here. Again, 660% of historical volume here. So somebody has been accumulating here. So I bought it here. Once I got this thing, I got the outperformance for 3 odd months, and it took 52-week high. I bought it here for the first time, 172 odd. This continued to remain in green. Sometimes it became red. Again, it took out its high, and you can see this has exactly coincided with 1761% of the historical volume. It was 21.62% of volume. Somebody has again bought humongous quantities here. End of the day, I got the confirmation. I brought it at the end of the week again. And I'm every time it is moving sideways and taking out the high, I'm adding it. Again, you can see somebody is buying here. So we don't know who is buying, but we can see those digital footprints of somebody is buying, and I'm continuing to holding it on. And you can see this is green. So this has already given me 3x from the past. Coming to the presentation. So two things I wanted to point you out here is one is this relative strength and another is traders lines enhanced volume. We have to just ensure that this stock remains in strength for at least 3 months or 3 to 6 months before entering it, because we can also be wrong and we want to avoid errors. The exit rule that I follow is I exit when open is equal to high and or fall of more than 6% in a day. I exit 25%. If there is drop of 30% from the top from all-time high, I sell 50% of my holdings. Sell first, think later. The news will always come late. Remember how Yes Bank is being sold to you. Every time it was dropping, there was a positive news being planted for us. Oh, the stock is coming down. It is attractive valuation. This is happening. That is happening. People like us, we kept on buying and see where we are now. Stock below the Lakshman Rekha for more than 6 weeks, I evaluate whether the sector is still in favor or not. And then I decide. Lakshman Rekha is relative strength line below zero. We need to have exit rules in order to be there, because more than 85% of stocks since 2002 have given back the wealth that they have created. Examples are plenty. We all know ABB Power. I mean, the examples are like R Power, Suzlon, and whatnot. Many of them. And never, never, never ever do is average your losers. This is the great Paul Tudor Jones. He had a sticker written in his office: losers average losers. If the stock is not consistent with your hypothesis, get out with a small loss. Your assumption or a hypothesis is not been respected by market. You are probably the stock is good, but the timing is wrong. And we should always have less losses. Why? Because whatever losses you have, we cannot be right every time. We will be wrong. And we just need to be wrong. If we are wrong, we need to be wrong for a smaller losses. So every time there is a small loss, we need a higher amount to get it break even. So 10% loss, I usually exit at 8% loss. 10% loss, we need break even at 11%. If there is a 50% loss in one script, you need 100% returns to break even. If there is 90% loss, you need 900% gains to break even. So we are just wasting our time. If it is a loss, minor loss, get out. Look at the new script. So the tools that I told you is dual relative strength, and this is a website of our community, rswarriors.com. And relative strength of the stock, one of the indicator which has been built by Bharat Trader. And optimize the software that I use for detailed analysis and to micro dissect some of the data. And special thanks to all my colleagues from the bull stock groups and my seniors and colleagues, Dr. Chetan Deshmukh, Dr. TP Sahu, Dr. Chetna Bakshi, madam, Dr. Bharat Chauhan, Dr. Naresh. Naresh is a neurosurgeon who is very much gifted in coding and validating the hypothesis. Rohit, Dr. Rakesh, Dr. Yogen, and Dr. Parthiv Shah from all the bull stock community. And one thing is from this book of Trading in the Zone is we are always dealing with probabilities and not uncertainties. You should always keep that in mind. This is the set of resources that you can read upon, because we are just scratching the surface. I cannot tell you everything about relative strength. You need to give at least 2-3 years of the time to understand this in detail and build your conviction over a period of time. One of this book is by Prashant Shah, who's an Indian author, and he has ability to simplify it in a very simple language. This is one of my other mentors is Mark Minervini, momentum investor. This is William O'Neill, first time who gave the concept of relative strength. The point and figure chart, father of point and figure charting, Thomas Dorsey and Gary Antonassi, who gave the concept of dual momentum investing. This is all 1500 pages that if you read and give time, you will Thank yourself for that. One last example I would like to give you is about the power, that is the ABB power. And then we'll take the experts and questions. So there were stories that power sector is coming into action and we need to invest in power sectors. So at that time, there were two stocks. One is R Power and one is ABB Power. So I chose ABB Power and one of my colleagues, they took R Power because it was cheap. Sasta tha R Power. It was corrected from the top. Naturally, they thought sasta hai, ye bhi badega, but it is not the story. We need to be with the leaders. See, it took the 52-week high. It was outperforming here on the daily time frame basis from November to February. So 3 months it was outperforming. I bought. Even if I bought, it corrected a bit, but since this is green, I continued to hold it. It made a new high, I added again. It made a new high and corrected, I added again. Thrice. Fourth. Fifth. So every 100% or 50% gains, you keep on adding the same quantity. So if you just need two wins of 100% or 50%, because anyways, we are getting out at 30% from the top. So even if you're gaining 200% and you're letting go the top 60%, 30%, you still are left with 150% returns. That is more than what we need. We cannot always get the bottoms and the tops. Even the promoters don't get it. So leave us. So we should avoid the urge and the likelihood of being right and the early to the party. We should go to the party when the party is actually in the happening. So this is my last buying here at 4,600. This and again, once this takes out this previous high, I will add it to my positions. So I have an attitude of gratitude to all my teachers, mentors, colleagues, and seniors from the various institutes where I had the privilege to learn from the Historical Tata Memorial Center, Gujarat Cancer Research Institute, GCRI Ahmedabad, IIM Ahmedabad, and CMT Association. The quality is endless journey, and thank you all for your patient listening. Thank you so much. Over to the experts.
Thank you very much, Avinash. That was really fantastic. And I can only say that I have understood only 5 or 10%. I will have to continue learning from you. But let's move on to Chetna and let us ask her what is her strategy for trading and how she makes lakhs of rupees every month on that. Chetna, over to you.
Yeah, so actually, this is my favorite indicator too. But sir, I mean, rather than commenting, I have a question for Avinash. Can I ask him? इतना time है अपने पास 2-3 minute. So one is Avinash, like you said that we are in relative strength. You see the sector, right? I mean, you are comparing with Nifty 50 or bank with a bank Nifty. But there are some sectors which we do not have a ready-made benchmark. Like for example, railways. We are discussing railways over the flavor of the season. And if we want to compare some railway stock with a railway sector to see the relative strength, so can we customize? I think you just touched upon this, but you didn't explain us.
Yes, yes.
So we customize the sector. Can you do that on the trading view?
Yes, yes. So we can do that. So we can customize our own index. I will show you a very crude way to do that. Even we can even create an index of our own portfolio. So like if we are holding the 20 stocks, I'll just show you how can we do that. So just assuming I have ABB power, ABB power. Let me take ABB power.
So we can't see your screen, Avinash.
I'm so sorry. Just a minute, madam. I will share the screen again.
Yes.
Apologies. Yeah, can you see the screen now, madam? Yeah.
Yes.
Yeah. So ABB power, then you just add plus here. Then another stock that I am having is Jyoti, Jyoti, Thy, Jyoti Labs. Then again put a plus sign. Then Kpit, KPIT, KPIT. And keep on doing that. This is assuming that I have put an equal weightage for each and every stock. That is why I'm adding plus, 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 plus. Okay. So if there is a sector, then we can go according to the market cap. For example, in railway, I'll just show you that also. And when I click the enter, oh, just a second. I'll just remove this plus and I'll put an enter. We'll take the plus for me, sorry. Then we'll go for now see what has happened. So I have made an index of these three stocks that I'm holding in my portfolio.
Okay.
And to make it simpler, we can make it in the line chart, and this is my customized index.
Okay.
And we can see it is been divided with Nifty, it is outperforming.
Yes, right.
Yes.
Okay. Oh, बढ़िया.
This way we can do that. We can do this for the sectors where we don't have. So for textile, we don't have a customized index.
Right.
For liquor stocks, by policy, I don't invest in liquor and tobacco, but those who want, they can customize their index where there is no ready-made index. They can do this in the crude way, or they can divide it as per the market cap of their uh, individual companies. Yes, madam. Thank you.
Yeah. One more thing, you are using only one parameter like relative strength, or you add it? I mean, you also use 20, 50 DMA. I mean, Dr. Niraj can also tell us about what he does, because it is only one parameter you use, or you mix two, three parameters and then you decide.
Yes. So I use 52-week high, outperforming sector, outperforming stock, and RS positive for more than 3 months. Then I look.
So moving averages you are not using. 20,
No, I'm not using moving average because I have relative strength which is telling it is outperforming. Why to anchor to any moving average?
Right. नीरज सर आप क्या करते हो? डॉक्टर नीरज?
Yeah, hello. Am I?
Good evening.
Yes.
Yes, sir. बोलिए नीरज भाई.
Sir, you're on mute.
Sir, you will have to unmute yourself.
Is it done?
Yes.
Yeah. So what I follow is I generally invest in all 52 weeks high stocks,
Awesome.
just as Sir does. Relative strength, absolutely, it is a must because we always want winners in our portfolio. It is just like if you are selecting players for your IPL team, you will choose the best performing players. So we want the best performing players, and that is what relative strength tells us about. So I use the same indicator. One is this relative strength. Another, if you want to make some changes, like if you want to, sometimes when there is no sector, and if you are confused between the two stocks, which one to choose, like whether IRFC is better or RVNL is better, you have limited amount and you want to invest in only one stock. What I do is, instead of Nifty 50 or CNX 500, I plot against the another stock. See, if I'm seeing RVNL, I plot it against IRFC. Then I will get who is performing better. So that is how one more way we can use if you want to compare two stocks, if you want to invest in only one stock. Because there are many investors who take a very concentrated bet. They don't want to divide between the two. So for them, this is one thing which we can see that how we can compare. I mean, which has more strength. So this is regarding relative strength. Another thing, what I use is ADX, average directional index. So I get the confirmation from relative strength and the ADX. ADX gives the strength of the trend. So this is just an additional confirmation that once it is more than 20, I don't wait for it to go beyond 25. Ideally, it is said that more than 25, then the trend is strong.
Strong.
So I don't wait for the trend to go to above 25. If it is more than 20, then it is okay for me, because relative strength is already giving me an indication that this is worth buying. So volumes, as sir said, relative strength turning green, and ADX more than 20. These are the three parameters, and I generally check all these on weekly frame. So if weekly frame for 52 weeks, and in relative strength I use 52 weeks, that is 1 year thing. So if it is the relative strength for 52 weeks is positive, ADX in weekly chart is more than 20, and volumes are popping up, these are the three indications that I will enter. Then I'll go to the daily frame, and then I see where I get the ideal buy point. So whenever it is breaking some pivot, I take an entry, and then I can hold it very well. My exit criteria is where I use the EMAs, and I use 30 EMAs. If it breaks the 30 EMA, then that is my exit point. Otherwise, if it is above 30 EMA, then I'm very comfortable holding it, and I don't mind much, and I don't see very much variations on the daily frame, unless in some stocks where I do momentum investing, there I dedicatedly follow the daily charts, and my exit policies are also based on daily time frames, and that is. But for a long term point of view, I follow weekly charts, and entry is relative strength and ADX confirmation along with volumes, and exit is 30 weeks moving average.
Excellent.
So that is how I do.
Yeah. So I also use relative strength only. However, I also use moving averages. So there's always a pullback, right? I mean, whenever stock goes up, it will never go up vertically. There will be pullback. So whenever it takes support on 20 DMA, I again add. That's how I keep on adding the money in the same stock. That's what I do. And exit ke liye, nowadays I've started using something called a super trend, which is there on the trading view. That is also very good indicator to help us in exiting the stock.
Yeah, perfect.
Anyway, Chetna, but how do you make all the money that you're making?
Sir, I mean, I don't think so. Because when I see in the group, people are making so much of money. I am not making that much of money, but maybe I am lucky that I have not lost a lot of money. That much I can.
No. What I mean is that
I
what
share
is your
that.
policy? What is your policy? Or what is your strategy?
Yes. So I generally do momentum trading. As he rightly said, I also use relative strength as an indicator. Then I also use other indicators like price action. May flag is something which we look for, and whenever there is a good momentum, that is the time we enter. Exit is what is the most important thing for making money. Most of the people know they buy and then they don't know when to exit, and one day suddenly it will go down. So that is what is. Secondly, valuations also. Like I invest only in those stocks, in those companies which I think are fairly valued. Those are the only two things I look into. That's all. And as I said, touchwood, abhi tak luck has been in my side, so I've not really lost money. Lekin yeah, these are the two things. Momentum trading may flag and ascending triangles we see, and this relative strength indicator is a very good indicator which I think most of us are using, and it really helps.
Awesome. Niraj bhai, what else? Since you are, self-taught man and you have developed your own unique systems, besides the point that you already mentioned, is there anything other take-home message that you want to give to our audience?
No, sir, this is it. And basically, just as ma'am told, for daily investing, I mean, for momentum investing, what I do is I just follow technicals. I don't see any fundamentals. The reason being is when we are buying momentum, it doesn't matter what the fundamentals are. This is just a momentum burst, and we have to catch that momentum, and we have
Correct.
to have the right exit policy. Secondly, where just as ma'am told that flag, so I generally trade high tide flags. So those stocks which have moved around 100% in say 8 to 10 weeks, and
Yes.
then they are consolidating. So this is the time where most people fear to buy. they feel that this has, अरे यार 100% move कर गया अभी तो ये 2 महीने में, now this is not going to bite. But then these are the real stocks for momentum. These are my favorites, high tide flags. So high
Understood.
and tight means the stock after 100% rise also doesn't fall more than 25%. So those are the exact kind of stocks I look for momentum trading. So for long term, weekly time frame, I see fundamentals and everything. But for momentum trading, and specifically if you see this IRFC that has given a classic high
Oh,
tide flag, it broke out and again gave another 100% move. So people who were thinking abhi buy kare ya nahi kare, abhi itna move kar gaya, that actually moved. Similarly with Cupid. Cupid moved 100% in 1.5 months. So it was a
right.
classic high tide flag. And again now it is forming a high tide flag. But I am a bit skeptical now whether to trade that or not and for another 100%. Yeah. So that
No, but
is
this
what I
is
do for yeah.
सो जितना
this
ऊंचा पोल है उतना ऊपर जाएगा,
उतना जाएगा
ऊंचा पोल
जाएगा
का
100
जितना है उतना ऊपर जाएगा. वेरी सिंपल.
जाएगा 100 गया 100% गया तो मिनिमम 50% जाएगा. So it will move same points, not percentage wise but the number points wise.
This is a great insight, and I'm sure that we will keep learning from whatever you are teaching us. So
Yeah.
thank you very much. I think we have already exceeded time, and I must thank all three of you. Avinash has done such a fantastic job for a second time for us, and
Yeah.
I think the more we hear him, the more we understand. Chetna, she claims that she is lucky, but she is obviously lucky because she follows our system. And Niraj bhai, you have also shared two different strategies, one for momentum trading and one for long term. And I think
Yeah.
there is so much overlap that we have to get unique points from each one of you and continue in the path towards wealth creation. So thank you
Sure.
very much for giving us your insight, and Avinash
Thank you.
especially for
Thank you.
sharing your own actual figures. Not many people are willing to share that, but the way that you have taught us is absolutely fantastic.
Sir, I had my mistakes also, but in the interest of time, I have not shared them.
No,
Sometimes.
absolutely, absolutely, absolutely.
We will
Great,
have
great.
one seminar only on mistakes.
That will be
Then I will be talking the longest in that seminar.
He has mistakes. But it takes courage to
to
tell your
acknowledge them.
mistakes.
Yes,
That,
absolutely.
that needs courage.
Yeah, that is true. So there are some questions on the chat, and
Yes, yes.
maybe we can ask you to answer them,
Yes,
and
sir.
then we will close the meeting.
Sure.
So Kavina Creations, please don't close the meeting just now.
Yes,
For
sir.
all those who have asked the questions, please wait and we will answer your questions in the
Yes,
chat.
sir.
Otherwise,
Okay.
thank you. Thank you very much.
Yes.
And we will make sure that we invite you next time also to be part of our faculty.
So one of the question here is, I'll take some questions I can see. One of the question is from Amol K. Current market situation where Nifty is all time high, should we keep invested or should we book partially and be completely in cash? What is your takeaway? Sir, as I have said, there is always a sunshine somewhere. So I will be at the place where the sunshine is. I will be in the performing stocks. I am completely invested. The moment any of my exit criteria is hit, I will exit.
Right.
Another question is by Nisarg Bhav sir, because you will never get an ideal time. कि ये सही
Alright.
भाव है, ये सही मुहूर्त है. There is nothing. Every moment in the market is unique. Every trade, every execution is random and independent from each other and mutually exclusive. That we always have to keep in mind.
Right. And we always become smarter after the fact is over.
Yes, yes, yes. Another question is Niraj Bhavsar. How do you find the stock scanning criteria? Because stocks are so many. Do you find on money control? You can use any tool, Nisar. What I do is I said, no, I share this tool called as Stock Edge, where you can see 3 months performers, 6 months performers, and anyone that is 50 or 100% high and giving a 52-week high. Then I look for the footprints of any big mutual fund or investor who has bought at an excessively large volume. Then I track the delivery to the traded volume. If that is also there, and the entire sector, I mean the other sister companies of the stocks or other competitors of that stocks are also performing a bit or more, then I take my entry there at 52-week high with a stop loss of 8% that I can always be wrong. If I'm wrong, I will be wrong for 8%. If I'm right, at least I will be right for 60 to 100% and I will add my positions further up there. How to screen the stock for system described by Niraj Bhai? Yeah, I think Niraj can answer that. If Niraj Bhai, छे अजी नीरज भाई कि जाता रहा नीरज भाई exit strategy of Dr. Avinash apart from fall of 30%. Yeah, this is an interesting question. I think I shared that, or I'll just revisit that again from the slides. Can you see my slide? Hello?
No, we can't see.
Sorry, I'll share the screen again. Sorry, madam. हाँ, हाँ, ये है. हाँ. So, open is equal to high and fall more than 6% in a day. So, what this means is the script open and from there is a continuous selling of 6% in one single day. I exit 25% of that. That had happened with me in Adani Total Gas Limited. I just exited because I was fortunate that I had devised this rule till that I could save some of my profits there. The news will always come later. The news, real news will always come later. We don't have the resources, the tools. We don't have the Bloomberg terminal. Even they come to know the news later. Even Bloomberg, they don't know it in real time. So the news is always late. You just have to follow your rules. I will show you the chart of Adani Total Gas. Drop of 30% from all-time high. I sell 50% of my holdings. This I did in Tata Elxsi, I showed you. And other exit and other rules are is like if RS is underperforming for more than 3 months and I see it is growing below the zero line, then I book my profits. I mean, whatever profits I get, 100, 200%, I book them because anyways it is not performing. Why to waste time there? Why to, as I said, one of the intention is to not have the stocks in underwater equity. Okay, I'll just show you ATGL, Adani Total Gas Limited, just for a moment, how this exit helps. Again, we'll go for this candlestick chart. Just a minute, I'll just reduce the time frame so that it is accommodated here. This was for the first time when I bought Adani at 1700 odd rupees. This is where I bought because it took, after the COVID fall, it took out the high here. And despite this, the price is same, but see, it is outperforming even on the weekly time frame here. You can see. And before that, it was outperforming. So 3 months, 6 months of outperformance is enough for me to enter the stock. What I want is first 2 transactions to be profitable by 100%. This one I bought it here. Again, I doubled it here. Now, when I bought it, I didn't know that it will go till here. I bought it here. I again added up here. Now, this is what happened here. From here, my last buying was here around this date. That was on 8th of, this is on October, I think, September 2022. And we'll go to the daily time frame here. From here. And we can see. So the exit rules that I told you. Look at this. 8% drop in a single day. My rule was open high and or 6% drop in a single day. I exited by 50% returns there. I could hardly get some 200 odd percent here. So I exited here. इधर तो buy किया था. I exited here somewhere around. So there's 96%. After adding for multiple times, I got 96% here. And again, after that, see, this 20% drop. If I have missed it here, this 20% drop, and then there is no chance after that. So whoever has made the wealth riding up, he or she has to exit or else they will end up giving all their way back to the market. Yes, that was my another rule. The third rule is it continues to underperform for more than 3 months. And fourth is again a trigger. So again, Polycab, which I am holding, I could exit it much before then the news came, because news will always come later. Actually, the sales were better, but because they had some irregularities in the reporting, it has been falling down. Nothing wrong with the company, nothing wrong with the product, but this is market for us. Yes. And that's all, sir, from me for today. Any more questions? Stock specific.
Very nice, informative talk, Avinash. Very nice.
Thank you, madam. Jayesh bhai, I cannot comment on individual stocks. You have to have your own rules. I can just tell you what I do.
And all this data you can get on NSE website also. Like whatever he's saying, na, stockage mein jo milta hai, to NSE website pe also it is available for free. So if someone is thinking that I have to purchase it, I have to purchase that, aisa kuch nahi hai. Everything is available in free on NSE website. You can go what are the 52-week high stocks, or which are the stocks which are traded high.
Yes.
Sub data is available.
Everything is available at NSE, say money control, but we just have to find out. Like RVNL, somebody said RVNL, right? Have a look at RVNL. I just have something for you. So see, 3 months, it has moved to 90%. Niraj bhai was saying, no, I buy 100% gain stocks. So at the end of 3 months, it is performing. If anybody would have entered RVNL, look, from 91, 122% in 6 months, 300% in 1 year, and more than 750% in 2 years. The problem is holding on to the profits. That we have to condition ourselves rather than being smarter and identifying it before that I have the cheapest price. It is okay to buy it at 100% high, but hold it and ride it properly. Handling will make all the difference, in my opinion. And still we are not done. Thus, because these are sectorial themes, these are sector movements. They don't happen overnight. They can go for 5 years, 7 years, decade. We don't know. We just have to be on the right side of the market. Thank you so much. I think I have tried to answer most of the questions. Madam, if there are any, you can answer them.
Okay.
Questions are done, and we have, as sir rightly said, we have almost
overshooted the time. Apologies, sir, for that. Yeah,
I think this was the best use of time. So nobody will complain about overshooting the time. But as everybody knows, all good things must come to an end. Some of you must be hungry also for having your dinner.
Yes,
so thanks very much, Avinash.
Thank
I
you.
must especially thank Avinash because he was a last minute replacement. One of the other speakers could not, come for some personal health issues. And Avinash so kindly enough immediately said yes when I had asked. So Avinash, once more, double thanks to you for that.
Thank you, sir. Thank you.
And thank you, Kavina Creations team, for being with us. You can now close the meeting.
Thank you, the organizers. Thank you,
so
everyone,
much.
for
Thank
the
you so
pristine
much.
listening.
Thank you.
Madam.
Thank you,
Bye,
Chetna.
bye. Good night.
Bye. Bye.
Thank you. Good night. Good night.
Good night, sir.